Namaskar, this is Akhilesh Bhargava. Welcome to Tit-bits on Business and Finance with me. It's 31st August and the moratorium period for repayment of loans given by the Reserve Bank ends today. With the RBI in no mood to extend it any further, even for highly stressed sectors like real estate, entertainment and hospitality, reality now dawns on the lenders as also on the borrowers. Let's discuss about it. It was on 27th March that the RBI governor announced a moratorium period initially for 3 months, which is March, April and May. This period was later extended to 31st of August and that ends today. The moratorium was meant to be a temporary deferral of loan repayments by borrowers. It was not any kind of a waiver. It was not meant to stop the interest meter of the banks in the meanwhile. You may not pay to the banks in this period at your choice, but your interest meter was going to continue. During this moratorium period, if a borrower chose to exercise the option and he did not repay the installments or the interest, the Reserve Bank said he is not going to be tagged or marked as a defaulter and his credit history will not spoil in any manner. As we said, the moratorium was at the option of the borrower, and except for a deferral of the payment, there was no other real relief which was given. It was actually meant to postpone the inevitable that could take place, which is a rise in further defaults and NPIs if no such relief period was given to the borrowers. The purpose of the moratorium was to de-stress India's financial system and prevent any further chaos or collapse of the system because of imminent defaults in repayment of loans on account of the lockdown, close down and the COVID stress that businesses and borrowers were facing. Estimates say that many borrowers took advantage of this moratorium period. Bankers are not coming forth with the exact figures, but estimates are that between 40 to 60% of borrowers did exercise this option in the initial months. Later, this figure reduced, but it would not be wrong to say that at least 40% of borrowers exercised this option. In the urban areas, it was more borrowers who chose this option as compared to the rural borrowers who did not take it on a large scale. The moratorium was not just something new. Even when demonetization was announced, at that time, a 60-day moratorium was given by the RBI to the small businesses, and that was because of the entire disruption of their businesses which had taken place because of demonetization. This time, it was disruption across the board, and thus moratorium was given to borrowers by the RBI across the board. India was not the only country which did that. Even the UK announced such a moratorium, so did Singapore, so did Italy, so did Malaysia, Brazil and many others in some form or the other. The fact of the matter is that the moratorium was meant to be a temporary measure. It was meant to give an interim relief period to the entire system consisting of the borrowers, the lenders and the regulator itself. And the purpose was to find a cure for the imminent large-scale defaults which were going to take place because of the stress caused by corona, the lockdown, the close down on the economy. It was expected that all interested parties would work towards ensuring that defaults were minimized because of the pandemic. And what was the cure expected? What was expected of the government was a cure by way of a suitable policy and stimulus fiscal package such that borrower incomes would at least get stabilized if not strengthened, and their cash flows would be restored so that whenever the moratorium period ended, the borrower would be able to repay his loans and the default would not take place. What was expected of the regulator, which is the Reserve Bank, by way of a cure, was that a suitable restructuring measure would be announced much in advance such that for all viable and good borrowers, after the moratorium period ended, they would be able to restructure the loans, get an additional time for repayment, avoid a default and save their viable businesses. That is what was expected during this period of relief, as we call it, which was the moratorium period of 6 months. What happened during this 6 months from 1st of March to 31st of August? During this 6 months, the stress in the economy went up. The businesses faced extreme stress. Savings got eroded, businesses got eroded, cash flows got eroded, livelihood receded, jobs were lost at an unprecedented scale, as the RBI said. This deterioration that we talk about during this period very clearly reflected on the GST and income tax collections during this period. And during this time, the cure that was expected of the government was a suitable stimulus package in order to pump prime the economy and support it. But what we got was a farce of a stimulus that did very little in order to revive a slowing economy. During this period, the risk perception of banks went up such that banks became even more risk averse, and instead of lending, they were happy depositing their surplus monies with the Reserve Bank of India, getting a paltry rate of interest. They deposited over 8.5 lakh crores with the RBI instead of lending to borrowers. That was again witnessed during this 6-month period. Consumer demand fell, consumer spending fell, assets became illiquid, their asset values also went down substantially. And what we are unfortunately now witnessing is there seems to be a second resurge of the COVID. Thus, during this period, from 1st March to 31st August, we did not find any improvement in the situation. From a borrower's perspective, he was only worse off as of 31st August, which is as of today, than what he was as of 1st March. His ability to repay and service the loan has only worsened, it has not improved, despite this 6-month moratorium relief period, as we call it, was announced by the Reserve Bank of India. No cure truly came into place. Since the fiscal stimulus package, which was meant to be one of the cures of this crisis, was a damn squib and a wasted opportunity, the only option was the restructuring package that was meant to cure this imminent disaster of a rise in NPIs because of COVID. But then, in order to be effective, restructuring was expected to be seamless, which is, if moratorium ends today, the restructuring benefit should have started from tomorrow, such that defaults do not happen, there is stability in the system. A gap between the end of the moratorium and the start of restructuring was highly avoidable. What happened was that the Reserve Bank governor announced a restructuring package very late in the day, and it came with an announcement that a committee had been set up under KV Kamath in order to announce the financial parameters under which this kind of a restructuring would take place, and thereafter the Reserve Bank would decide the parameters or banks would decide their parameters. Unfortunately, the recommendations of KV Kamath committee are expected only by the 6th of September, and thereafter there would be a further time lag that would take place in those recommendations being accepted by RBI and banks, and that becoming the package under which restructuring would take place. Thus, what we are witnessing is even the restructuring which was meant to be a cure has not been seamless. Between today to whenever the package comes in, borrowers are certainly going to be in confusion and stress and harassment, and so is going to be the case of the lenders. The real picture, according to us, is that moratorium of 6 months was meant to be a cure period, was meant to be a relief period, was meant to be a period to come up with a solution. And what we have got today is no solution truly on the cards. The solution, as we said, was either a revival because of government policy or a stabilization of the economy or a restructuring on a seamless manner. Neither is in place today, and in the meanwhile, the condition of the borrower, as we said, between 1st March to 31st August today has only worsened. So what is going to be the position that borrowers will face from tomorrow onwards? The first is that borrowers are now going to see a situation where if they have not paid installments for 6 months, the 6 months installment demand is going to be at their door along with interest in case they did not pay it. The reality that will stare in the face of the borrowers from tomorrow onwards is pay 6 months installments and pay the accumulated interest during this period. The reaction of the borrower that would happen is, in case his unit is viable, in case his business is viable, then he is going to seek a restructuring option and ask the bank to suitably restructure his loan. But the response of the bank tomorrow onwards is going to be, oh, the restructuring package is not yet finalized and announced and we really do not know what it is. Most of the bankers are going to actually tell the borrower, I don't think you're going to be restructured. We don't know what it is going to be, and you better be prepared to repay your loan somehow or the other. Otherwise, you are going to be tagged as an NPA and recovery action can be taken. Therefore, viable borrowers whose units are truly viable, are also going to face a period of uncertainty till the bank's guidelines for restructuring are announced, and thereafter would start the procedure of restructuring being put in place. The question that will be there on the horizon all the time, looming on the borrower, is what if the bank refuses restructuring and starts the recovery action? For those borrowers who are not truly viable and whose businesses have collapsed or closed down or have got decimated, it is going to be time to go to the bankers and seek some kind of a one-time settlement of their loans in order to avoid the coercive action of legal cases, suits, and recovery procedures. That's going to be the situation of borrowers tomorrow onwards. Borrowers have been seeking an extension of the moratorium period, and as we said in the beginning, Reserve Bank is in no mood to give that. Senior bankers have said that no more moratorium should be given for the simple reason that according to them, many borrowers are taking undue advantage of it. It is spoiling the credit culture in the country, and some of them are asking, how did the moratorium period anyway help the system, both the borrower and the lender? And it looks like even for select sectors, the RBI is not going to extend the restructuring period, and the reality, as we discussed, is going to be at our doorstep from tomorrow. The larger reality that India will actually face is that NPAs in the system will go up substantially, and perhaps what the Reserve Bank said in one of its recent reports, the NPAs are expected to go up from 8.5% today to probably 15% as of 31st March 2021. According to us, moratorium has proved to be a wasted opportunity only because during this 6-month period, a cure should have come. But the cure did not come, neither from the government and neither from the Reserve Bank on time. Let's see what restructuring really proves itself out to be. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app. Choose the language you prefer to get updates in and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.